I'll just make a quick title intro as we welcome everyone. So introducing Ivie, who you probably saw in our epoch. She's co-author of the Institutional RWA Guide and founder at Somma Marketing. We've got Ruca, who is the head of growth at Karpatkey. We've got Matt heading BD at Redstone. Marek, who is a co-founder of Celo and Self. And we've got Korn, who's heading BD at Yearn as well. So excited for this conversation, folks. I see we've crossed over 5,000 views, so we've got quite a few people watching, and excited to hear all of your perspectives on the different innovations from a product level. Please take it away.
Thanks, Michelle. So yeah, last panel, everyone's tired. So this is a great opportunity to give some maybe more extreme point of views, maybe some things that are slightly controversial, like just don't hold back for this one, please, guys. So thanks a lot for being here. Thanks for the intro, Michelle. So yeah, we will kick it off with some introductions first. I think from my point of view, I've seen DeFi develop over the past couple of years from being like super, super niche to still being niche right now. At least that's my opinion. Like, I think all of us, we all like know and use DeFi probably pretty often, but if I have dinner with my friends, I can still not really talk about DeFi. So I would really love to hear like your points of view, like how do you experience DeFi so far? Where do you see it going? And then I would really like to see if we can have some overlap between you guys, because we have some really different perspectives on the panel today. So let's take it from there. Would you like to get started with an intro, Marek?
Absolutely. Hey everyone, I'm Marek. I'm one of the co-founders of Celo, which is an EVM L2, and Self Protocol, which is a new ZK Passport decentralized identity protocol. And yeah, I guess my thoughts on kind of the future of DeFi are certainly around, how do we onboard more normies? How do we make things a lot simpler? And, I think the thing that I've come to realize is, I think we've kind of exhausted the set of people that we can onboard who are incentivized by bringing money into DeFi and then earning additional rewards. I think we've had just a whole bunch of cycles in crypto around onboarding people with capital. I think the next big wave is going to be people who come into crypto without having to bring new capital. And so I think the future in my mind is one where we can incentivize these people with really good Sybil resistance. And so that's one reason why I'm working on Self Protocol. Self Protocol can reward people to come into DeFi, to come on chain, even without them having to bring capital. And it can do so in a decentralized and privacy preserving way. And so I think I'm really excited about that future. Happy to go into that some more. I'm also really excited about on-chain FX. On Celo, there's a growing amount of on-chain FX. FX is $2 trillion a day market, I think. And so I think we have a lot of opportunity to move more of that on-chain, make it truly 24/7, not just on weekdays. And then I'm also just really excited about coming back to normies, peer-to-peer payments, giving people utility on-chain through payments, and then slowly getting them excited about DeFi as kind of an add-on, not necessarily as kind of the main thing that gets them through the door.
I love that. Thanks so much. I would love to go more into that, especially like the normie aspect of it. But first, let's move to the other speakers. Ruca, you're next on my screen. Would you like to introduce yourself?
Yeah, absolutely. Thanks for having me in the first place. My name is Ruca. I'm head of growth at KPK. We're the leading DAO treasury asset managers out there. I've been deploying a lot of capital on behalf of the biggest DeFi DAOs. And we've been recently focusing on opening up the distribution onto the retail through curation and other products that we're bringing onto the market. So we're super excited about the stuff that's coming. Throughout my time in KPK, I've been sort of wearing a lot of hats, but it's been mostly about making the shift from sort of the crypto native capital to the more traditional capital, and realizing that we still haven't reached the 2021 mark in terms of TVL, so we haven't moved the needle effectively in the last 4 years or so. I don't think most people realize that. So it's mostly about finding new ways to onboard net new capital. It's where I'm mostly focused about.
Thank you. I think we did move a needle. Like, I've seen many things change over time, but I agree with you. Like, we maybe not are there yet where we would like to be. I would love to dive more into this later on, but first let's go to Matt. What are you up to?
Hi everyone, Matt here, head of BD of Redstone, which is an Oracle provider. So as an Oracle provider, we mainly specialize in yield-bearing collateral for lending markets, meaning we work with mostly the blue chip DeFi protocols like Morpho, like Compound, like Spark, like Venus, Camino, and many, many others. And we make sure that these protocols can actually accept the highest quality collateral possible on the market right now. Anything that's yield-bearing, whether this is stable coins, whether this is ecosystem native assets, whether this is RWAs, as the industry likes to call them, or as I like to call them, asset-backed tokens as well. So there's a token on the blockchain, but there's also some backing off-chain, and kind of combining these two together is also the bread and butter of what we do as an Oracle provider. And from my perspective, since we really focus on the lending aspect, we do stuff also around perpetuals when it comes to hyperliquid especially. But it's great to see, I guess, both of these sectors of DeFi really grow in terms of revenues as well, and actually become real as products and as businesses. So that was literally 2 days ago, I believe, that Spark protocol, so one of the biggest lending markets as well, closely tied with the Sky ecosystem, released their P&L report. And this is, a business just raking in a couple $100 million in revenue while being very lean on operations as well, being very profitable as well, all through the fact that there's a couple of business lines that they have. There's the risk curation, or you could call it investment management side. There's the protocol side, so they're also a lending market when they have a take rate on the total yield accrued. But in general, it just shows kind of the scalability of that kind of infrastructure versus traditional lending businesses versus traditional financial firms as well. And it's great to see that this becomes real, that we really talk about those companies in terms of revenue. I mean, Hyperliquid alone is raking in like 1.5 billion a year. Aave is raking in a couple $100 million as well. So there's just a couple of those players, and this subset is growing that really have something that you could call a healthy business with a healthy margin that is profitable as well. And all of that is possible because they are protocols, not companies. So it's possible to have that kind of scale of revenue because this is a protocol, and this can scale pretty much infinitely to the size of the capital that you would like to, put into that protocol, as opposed to a traditional firm where you actually have to add money to be able to serve more of those requests. So that angle is very, very interesting. People call it the revenue meta. I kind of like to think that this is not a meta. This is just an objective way of looking at the market. It's just great to see that this gets mentioned more and more in this space.
Thank you. You already actually pretty much answered my next question. But before we go deeper into this, Korn, you're left.
Yeah, hi. Thank you for having me.
Hi.
I'm Korn. I've been working at Yearn for almost 4 years now, always doing BD and growth and exploring new partnerships and ecosystem integrations. And I also co-founded our audit company, Y Audit, almost 3 years ago. So Yearn is one of the first yield projects that there ever was in crypto. We have about $700 million in our vaults today. We're also a whitelisted curator on Morpho, and we're doing curation also on term finance, and we have some other structured products coming out soon.
All right, and would you maybe like to, because next I would like to kind of hear your maybe more broad point of view for how do you see, like, literally maybe the next layer of DeFi building in your respective area of DeFi? So for you, Corn, would you like to maybe share a little bit about what you see happening in the space of yield and yield farming, perhaps?
Yeah, I can definitely talk about that.
Go for it.
A few months ago, Vitalik came out with this vision for low risk DeFi, and that really is something that we identify with. Yearn was founded on these principles, that you need to have decentralization, you need to be immutable, and most importantly, for us all, especially right now, verifiable. You need to be able to know what is going on at all times as a user. And if the project that you're depositing your funds into doesn't have that information available, that's not real DeFi. Like, that's just not what it is. So today, I feel like there are two different approaches to yield in crypto. There's the permissioned side of things, and then there's the Ethereum, the DeFi, like true DeFi side of things. So I think the future is probably going to be both of these sides existing together. There will be some overlap, sure, but there are obviously institutions out there who are not ever going to give those controls or that visibility over to users. It's just not going to happen. They're always going to protect a walled garden. They're always going to come up with their own layer. They're not going to use Ethereum. And I understand that. I definitely do. They need to capture what they can and capture distribution when they're able to. And by using an open platform, that's not what they're doing. They're giving up that control. So the area that Yearn is going to focus on is that verifiable DeFi. That's the term that we're going to start using. I think it even captures what we are doing better than low risk DeFi, because DeFi inherently has high risks, especially right now. We've only been doing this for 5 years. We need more time in the market before we have a totally permissionless, bulletproof set of protocols out there today.
That's very interesting that you mentioned that. And correct me if I'm wrong, but Ruca, didn't you guys recently also collaborated in a project regarding this verification with Accountable, if I remember the name correctly?
No, what we did actually is that I actually relate a lot with what Corn just mentioned around transparency. I think it's one of the core features of Ethereum, and one that we should keep and preserve with a fierce amount of efforts. I do agree also that it's not going to be, it's not going to be able to take the market entirely, but at least it's what enables anybody in the world 24/7 to be able to participate in any financial market. And we've always been super supporters of DeFi and the way we see this is that, DeFi will always be the wholesale market. It's the first time in history that myself or you or anyone can access these traditional finance markets everywhere without some special kind of permission. It just happens so that because of that, it needs necessarily to have these complex layers that entails participating in those markets, and that what we're building so far is the abstraction and the simplification layer to be able to sort of cross the chasm from the early adopters to the general market. As for the products that we're building, it really builds from the stuff that we've been doing on behalf of the DAO. So we, as most of you may know, we work with safes as sort of the custodians of the funds on behalf of the DAOs, and then we use on-chain policies as smart contracts that enable us to have granular access and remote access, execution access to those safes without owning per se the secret keys of the owners of the multi-sig. And we've been doing this on behalf of DAOs since forever. What we're now doing is that we're adding a third layer on top of it, which essentially tokenizes each safe into its own portfolio, so we can open up access to anyone that wants to participate in any of our funds. And the interesting characteristic, and going back to what you just mentioned, is that the accounting of this is performed on-chain as well. So the NAV calculators are actually smart contracts that are calculating on a per block basis the underlying portfolio's NAVs, and you're actually subscribing, and you can verify the current share price, taking into account the issued shares of the issuing share contract. So you know for a fact that you're buying essentially that NAV at that specific moment in time. So this is where so this is our go-to-market strategy. Not only building out on transparency, but also on efficiencies that having all of the code on a blockchain brings, and that's how we're approaching the institutional side. Obviously, we have to take it with a grain of salt and abstract a lot of the complexities. Otherwise, you'll definitely lose them. But the way I see this, going mainstream is you having a sort of a token that represents a portfolio, and that people then subscribe or redeem and can participate in those markets without having to understand the intricacies of that. So that's how we're approaching this.
Thank you for elaborating on that. And Matt, that brings me to you, because what's your point of view on this? Like, for example, NAV calculations already living on chain. How do you view that from Redstone's point of view?
So I would say two main avenues that we have when it comes to, I guess, the concept of low-risk DeFi as well, that we are also super excited about. And so that resonates a lot. First thing I'll say is we tend to focus more on, I guess, the asset-backed tokens these days, because that is just what the asset issuers on-chain launch predominantly. So usually, if you launch a new token on-chain, it's usually in the RWA category these days, or it is a stablecoin. And these are the two main themes that we see. But if this is if this is both, usually there's some backing off-chain. And it's great that you bring up Accountable as well. We are a partner of theirs. We work closely with them, because basically Accountable's job is to prove that whatever you say you have off-chain, or whatever you say you do off-chain, you actually do have or do, right? So, and this can be understood in the form of, okay, it's like a statement, it's like a proof that this thing exists, so it's for the peace of mind. But this also can be actually the price that you use for your token in DeFi, and usually that is the use case. So people would like to, have their tokens listed as collateral, for example, on vaults that could also be managed by or curated by Yearn, for example, and other curators. And usually the best way to price them is to have a proper, we call it proof of reserve, in the collaboration with Accountable. That's like mathematically proven. There's different levels of that provability, but in the highest grade, you have everything mathematically proven as well, up to a certain HTTP request. And that is important, because I guess the alternative to that is like quarterly reports in PDF format that, yes, we have this backing, and yes, we do this cash and carry trade in the backend that we say we do, which is just not acceptable in DeFi, because you have that continuous timeline here. So the price, if you want to treat that as price, it has to be continuous as well. So that's, I would say, the leg one of us being involved as a company. Leg two is something that we've done about 2 months ago. So we've bought a company called Credora, which is a ratings business. You can think about it in the context of something like S&Ps or Moody's, specifically for DeFi. So for now, we are still relaunching that product after having incorporated it into the Redstone suite. But in general, what we want to give the users, and this is something that Corn also touched about, is that visibility into what is happening underneath, right? So there's a lot of data points that you can have from coming directly from the blockchain or from the protocol. And you can think about Credora in the context of this kind of a user-facing interface that basically takes all of that data points, does the calculation in the backend, and actually translates that into something that's digestible. So a simple rating, ABC, and whatnot, so that you, as either the end user, so an individual person interacting with DeFi, or a broader, institutional player, for example, or a hedge fund, or whoever is there to invest that size, you have something that you can trust based on a fully open source methodology. So that's Credora is being relaunched, I believe, this month. Oh, sorry, next month. So it's coming back, but this product has already been used widely, for example, on Morpho, and there's a whole pipeline of protocols right now that would like to have that kind of an interface launched on top of the protocol. So definitely the low-risk DeFi is something that we see as a big opportunity for ourselves as a company, but in general also for the space to really, really mature and become, properly user-friendly.
Thank you.
I signed up for your Credora event at Devconnect. I'm excited to hear more about it.
Yeah, I would love to hear where are you all going to Devconnect?
Oh yeah.
Yeah, yes. Okay, so before we finish the panel, you can all maybe share a little bit about side events that you would like to promote, so we can all sign up for those. I mean, we're already pretty much talking about the institutional space, which I love, and about the verification. I mean, in TradFi, you literally have a person doing this work, and it's just becoming so outdated. So I'm very happy we're moving into this more automated systems, which DeFi is enabling. Just going to you, Marek. I don't know if you want to also talk about the institutional point of view, but I actually was I found this on the Celo blog some time ago that you guys wrote. While we're not interested in building another JP Morgan, we will embrace working with companies that are looking to transition on-chain. Mm-hmm. Any thoughts on that? What's your thought on the whole institutional movement going on right now?
Yeah, it's a great point. So we have been working with some big companies. I think Opera is the biggest one that we have a partnership with. They're the browser company that's been around for 30 years. So they're really leading the effort around P2P payments and this kind of focus on normies that I was referring to earlier. They have a wallet called MiniPay that has 10 million users now as of, I think, this month. So it's been growing really steadily. And somewhat counterintuitively, maybe, for people in crypto, you can only custody stablecoins in that wallet. You can't custody Celo or ETH. You can only custody USDT, USDC, and CUSD. CUSD, by the way, is secured by Redstone on the Oracle side. So shout out to Matt. And the users are basically normie users who are using this for P2P payments. But there is also a dApp browser, and folks can participate in DeFi in the dApp browser. But it's definitely of the low risk DeFi variety, right? Critically, not just requiring all the points that Korn and folks have been talking about. Opera goes a step further and requires these DeFi protocols to only let users cash in and out using stablecoins. And so the experience suddenly starts to look a lot more like TradFi, even though it's self-custodial, even though it's running on DeFi rails. And it's just a lot of the complexity in crypto has just been abstracted away. And as a result, it's just very, very, very easy for end users. And so I think it's a really good example of kind of where DeFi is going. We're just making it simpler. We're making it easier for people. We're partnering with big institutions to leverage their, big existing customer bases to kind of onboard more folks. And we're leading more with utility than with kind of the promise of crazy rewards, which, again, we've seen historically. So that's kind of on the Opera side. There's also an ecosystem, project on Celo called Mento, which I was kind of alluding to earlier, that's doing on-chain FX. They're obviously also, partnering with big institutions just by virtue of the FX market being so big and being so kind of entrenched in kind of this really massive FX space. And so that's, again, Mento is once again working with Redstone. A lot of the assets that they have are secured with Redstone oracles. It's a really cool protocol. They just have, I think, 15 or so stablecoins from around the world, and then they have a nice DEX that lets you do on-chain FX. And so that's another really interesting space where I think institutions are just going to increasingly play a lot bigger role in going forward.
Yeah, and actually tapping back to something you mentioned in the beginning, which I'm curious to see if there might even be a connection to institutional adoption there, because you talked about adopting more normies through the data, through the user bases of the traditional financial institutions already. And you mentioned like new ways to incentivize users.
Mm-hmm.
Do you see, like, is that usually targeted more at retail users, or do you even see that in the institutional space happening?
Yeah, I mean, certainly like biz dev deals where you have some sort of agreements between companies, that happens outside of crypto, happens inside of crypto, happens between Web3 companies, happens between Web3 companies and institutions as well. But what I was referring to earlier was more on the end user side, and so that's related to self protocol. If you're aware or if you're familiar, you may have noticed there's a little kind of rectangle logo with a circle in it on your passport. That logo means that you have a biometric passport, which means that you have a little microchip in your passport that can be read with your phone. And the data in that chip is cryptographically signed by your issuing country. And so the way that Self Protocol works is it basically, you can put the public keys of every country in the world on chain, and then you can create ZK proofs that prove that someone's ID, someone's passport, is in fact valid, has been signed by their issuing country, and you can do that in zero knowledge, so you can do it privately. And so that's basically what Self Protocol is. It's a way to bring on chain a lot of these off-chain attestations by issuing countries of people's ID documents on chain in a privacy preserving way, and critically in a way which doesn't require a counterparty. You don't have to show your passport to any third party. Literally, the smart contract is the third party that's verifying your ZK proof. And so that's kind of in a nutshell what Self is. And when you have this, suddenly you can do decentralized, privacy preserving, on-chain Sybil resistance, which is really kind of the holy grail, right, of Sybil resistance. I think a lot of people, obviously we're excited by proof of work and then proof of stake, but ultimately, as we've seen, especially in the proof of stake world, there's just a lot of Sybil attacks still. And if you want to do really good incentives, especially incentives for people who may not be bringing capital in themselves, you need to have a way to prevent you from being gamed, right? Someone can't create 100 accounts and receiving 100 times more incentives than someone else. Obviously, this is a big problem in the airdrop space, and I think with Linea and Monad airdrops, I think there were just astronomical amounts of Sybils that were discovered, but even more, I'm sure, that haven't been discovered. And so Self Protocol helps solve that problem for airdrops, but critically and more importantly, I think, for big companies entering the space and doing things that they're used to in the Web2 world, namely giving people some sort of incentive to get started. And so we're chatting with Opera about integrating Self, actually embedding Self into their wallet, so people can do ZK proofs directly from the MiniPay wallet, and then get incentivized for onboarding into MiniPay and perhaps also into dApps that are in MiniPay. But we're also working with other big institutions. So Google is another one. Google Cloud is actively integrating Self into 3 new products, which is pretty exciting. So the first one is their testnet faucet. So you'll be able to receive more testnet coins if you prove that you're a unique individual with Self versus using your Google ID. The next is a first of its kind product that they're calling a mainnet faucet. And so you can use Self to prove that you're not on the OFAC list in a decentralized, privacy preserving way. And so that means that you can actually give assets of real value out to people And so that's another really exciting thing that Google's doing, or actively building, I should say. And then finally, they have an AI product, a Web3 AI product that is very expensive to run. And so they're also looking at using Self to basically eliminate some very strict rate limits that exist today on accessing that product. And so, like, I think, the more these big companies come into the space, the more they're going to want to rely on the playbooks that they've had before, and the more they're going to need solutions for Sybil resistance to create the kind of onboarding incentives that we've just seen work really well in outside of crypto to date.
Thank you, Marek. That was a very elaborate response. And since we're slowly heading to the end of the panel already, I wanted to zoom out a little bit and maybe go talk a little bit more about the philosophical or the cultural aspect of these two worlds combining. And Corn, since you are using an avatar, I think this is a really nice question for you. If you think about institutions adopting technologies such as DeFi, but they are still facing really strict requirements in terms of security and transparency. How do you think that goes together with the decentral ethos of DeFi, or basically the crypto culture that we all like so much? Do you see these two worlds combining, or do you think that might be difficult to move forward?
I have had a lot of chats with banks and financial institutions who have the prerequisite that they need to know who every one of their customers are through KYC. They need to have no actual user funds mixed with the general DeFi baskets of deposits. I feel like some of the decentralized or verifiable platforms like Yearn v3 are flexible enough to be used by them. However, the way that we do accounting is programmatic and it cannot be tampered with. So if a financial institution wants to show a user that they've gotten a certain yield and they're using a permissioned product, they can go and show that user whatever they want to show them. And I don't know if they're going to want to use something programmatic and immutable. I really don't know the answer to that. So far, the answer has been no. So that's why I still think there are going to be these parallel worlds and these two different ways of interacting with finance. And there's always going to be a certain group of users around the world who need a place to be banked, a place to accrue value and store value. And I think that's going to be Ethereum. And I think for everybody else who happens to live in the US or live in some other place who has a stable financial market and environment, they're going to use those permission products. So I think it's going to be two different worlds.
Two different worlds. What's your take on that, Ruca?
Yeah, I tend to coincide and actually connects with my idea of wholesale finance, which has to do with the fact that everybody can access. So the 1% can always go there and play with the big guys, but the other 99% are just going to access it through third parties that just simplify the experience and make it easy for them. That's how I like to put it. As for our role into that vision, really requires making sure that DeFi still stays relevant in that realm, and that we can take advantage of this sort of global, always available and permissionless market for everybody to participate. And that's for us, that's a definition of capital efficiency. And make sure that we're able to onboard that into these TradFi guys and in any way possible. We've actually, in the last 2 years or so, we've been having a lot of conversations about regulation. I think the interest is there. They've hired their own internal DeFi teams, and obviously the yield, there's a positive delta in terms of interest rates right now that makes it attractive for TradFi guys to start looking into DeFi and find ways to integrate it. But it's just a question of how we can overcome the regulatory hurdles, and that has been mostly my job. I used to joke about the fact that I'm not selling anything anymore as much as I am a legal advisor for it.
But it's getting better, right? Don't you feel like, especially this year, it's been revolutionary in terms of the regulation?
The sentiment is good.
Okay.
The implementation at some point, at least the stuff that we're doing, which is being able to transport DeFi rates into TradFi, which is actually the opposite side of RWAs, right? Everybody, jumped on the bandwagon of RWAs, in which, let's breach TradFi yields on chain, and let's look for other pools of capital to be able to allow them to participate. I do think that there's a super huge opportunity in going all the other way around, which is, finding interesting sources of on-chain native yield that can be breached out into the TradFi world. And this entails, wrapping sort of all of the complexity on yield-bearing tokens, even on TradFi products that normal people can subscribe to and have indirect access to the yield. I mean, there's a bunch of stuff that we've been involved with recently that are mostly focused on that part. Finding the right distribution channels to allow for these guys to be able to participate. And coming back to what I was just saying in the beginning, the net new source of capital, it's exactly this, right? It's not, any zero-sum game where, capital is just chasing the biggest incentive, and it's super mercenary and whatnot, and then just jumps from one protocol to the other. It's like you find a pool of capital that has or is so where the knowledge is so absent that they're willing to stick with you and pay an interesting fee for that, and makes it so that you have a organic, sustainable business model, instead of draining yourself into native tokens, paying incentives out to everybody to allocate for 3 months or so, and then go chase the next opportunity. That's how I like to see that.
Thank you so much. And before we wrap it up, Matt, you guys are literally connecting different worlds. So what is your take on this? Do you see the two worlds colliding, or are you more on board with the rest of the speakers?
Yeah, I would love to see, two separate systems being preserved still. Simple example, for example, is there's a lot of talks right now on Twitter and also in some of the, group chats that we have internally in the company. Okay, how do we actually pay in Argentina? I haven't dug deeper into that. I don't know, what you should be using, if like a standard, Visa or a MasterCard from a European bank will work or not. But, people seem to be concerned. And for that simple reason, I'd love to have a very, very bare bones, simple system of, like payments or remittances. And on the other side of things, I would also like to have something that is just going to be fully institutional grade, for something that I could, invest with or into some of the biggest asset managers, brands in the world as well. I mean, products coming from them, right? This is something that's happening on the institutional side of things right now. So kind of breaking down the kind of minimal incremental size of investment you can have in something like a Hamilton's Lane, private credit fund. And I think both would be very helpful to have. You can think of it in terms of like messaging protocols, for example. You have email that is just like unstoppable, very bare bone. If you have to just like contact somebody, this is probably going to be the simplest way to do it. And you don't have to think if the other party is going to be able to receive that email or not. But on the flip side, it's not, the UX is not super beautiful. You're not going to be able to send everything. It's not like for super quick communications. And on the other side of that spectrum, you have a full stack, super app like like WeChat or Telegram, for example, and you can send GIFs and you can send videos and you can be very quick to respond. And it's just a different use case, but kind of both get you covered depending on what you want to do. And I'd love to just go to Argentina knowing that I have my crypto wallet and just don't care about, if my card is going to work or not going to work. If not, I can just pay with a QR code with the stable coins. I know it's possible. I know there's startups doing this, and specifically, I'll have to dive deeper into this. I just would like this to be simple and unstoppable. Should this be a use case? But if I want something that's very polished, very vertically integrated, I also want to have that kind of a option on chain.
Thank you so much. And let's wrap it up with an Argentina-related theme. So where can people find you on the social media to follow you? And are you going to Argentina? And if yes, where are you going to be? Marek, let's start with you.
Yes, so you can find me at Marek _. I have a really long Polish, difficult to pronounce and spell last name, so I spared you.
This is Twitter?
Yes, so I spared you the pain of having to type that out. So just Marek and then the _ symbol. And then there's also at Celo and at Self Protocol for Celo and Self. I'm absolutely going to be in Argentina, as is a lot of the Celo community. We're participating in the Uniswap Cup. So wish us luck.
Me too.
And, woo! And I'm speaking. I'm doing a keynote on the main event, the Devconnect
Amazing
event. So definitely come find me there.
What day? You already know what day?
No, they're still finalizing the event.
Okay.
But yeah, I'll be there all week.
Awesome.
And then we have a Celo Gather event and I think a self brunch. So definitely come find us one of those as well.
Plenty of things on your end. How about you, Corn? Where can we find you?
OMG Corn on Twitter. And I'm also playing in the Uniswap Cup on the Morpho team. So I will see you on the field.
Really?
And the best event at like DevCon, Devconnect, I think is always the Stable Summit. And I will be there. I don't know if it's 2 days or 1 day this week, but there's a lot of
that one out yet. Okay.
Yeah, there's a lot of good events within the Stable Summit also. So always a good one to go to.
And I think they're calling it the Unstable Summit this time around. So just for any listeners.
Ruca, how about you?
Yeah, I will also spare you about the spelling my Twitter handle, so you can search for ruca.eth and probably find me.
That's it.
Also going to be the entire week at Devconnect. Main event, we have most of our team over there. I don't know if you guys know, but our origins are Argentinian. So I guess like something like 30% of the entire team is comprised of Argentinians. So I tend to spend a lot of time over there as well.
So can you give like an insider advice for the people going there? Like, what can we not miss being in Argentina?
And how should we pay?
If you have a spare week or something.
I actually do.
Yeah. So definitely, I always, a lot of people ask me this. Go to Patagonia and go to the south, and it's really amazing. If you're into trekking, you're going to find the best routes out there. It's really amazing. I've been there in the beginning of the year, and I'll try to make some time to go there as well this time of the year. We have a lot of the team over there, so it's mostly about doing some gatherings. We're also hosting our events, pretty much the all-in-one with the real Argentinian asado in the end. So it's going to be
looking forward to this
on November the 20th, starting from 10 a.m. to 5 p.m. We're going to host some really interesting panels with a bunch of OGs in the space, and yeah, super excited to be there.
Awesome, thank you. And Matt, are you also going there? Then we'll just have the full panel there.
Yes, it's going
amazing.
To be a full panel. So you can find me on Twitter as well. The handle is just a name and surname, so quite easy. But yes, we're all going. We're going to have like 10 people there from Redstone. I'm not sure about the events yet. Stable Summit for sure. We always do come, but the rest, I think you're just going to see us around at different venues, at different events as well.
Yeah. Well, look forward to meeting you all. And then, Michelle, I think this is the end of the panel. Thanks so much for having us.
Absolutely. Thank you so much, Marek, Ruca, Matt, and Ivie. This was such a great panel, such a great conversation. We were so tuned in, and I know this was the last panel, but I mean, I'm just hoping we cross 6,000 because I see the numbers going up every minute of the conversation. This was so great. So thank you so much, guys, for taking time to join us, to share your thoughts. We love and appreciate every single project, all of your contributions to this space, and we are grateful for it.